we found ourselves in the money. Like 20 minutes ago, this was up here around break even, and then it sold back off, which kind of expected it, but it sold off a little bit more. When I came back, I'm like, holy cow, we're 52 pips in the money. So what I'm going to use on that position is 40 pips because I'm going to put a trailing stop on this, give myself a little bit of breathing room. And then the one that's out of the money is currently negative 197 right there. So we're going to use minus 197. So we're going to trim that guy 797 units and then put a trailing stop on this. So let's just set that up. Partial close, 797. And then this guy, we're going to put a trailing stop on him. Remember, you hit on the word stop loss, turn it into a trailing stop, and I want it to be exactly 10 pips. So let's modify that guy and partially close that guy. So we've trimmed, and now we're working our trailing stop for some continuation. Maybe this thing will keep sloughing off and we'll just keep walking away with an unbalanced hedge, which would be fun. When it wheels back, and does finally come back and hit this trailing stop, which it will, I'm going to buy at the market 5,684 units and put a 10 pip profit on it. Try and catch a little bit of the pullback. And then we'll set up a bracket order with a sell limit and a sell stop. That'll protect our hedge either way, balance this out. Sorry about that. Didn't realize that my charts had moved. I had them all stretched out. So now you can see the account down here. I know that's important. I want everybody to see that, be transparent along the way. So anyway, if you're like, hey, why can't we see the bottom? Now you can. So we're about 2 pips away from hitting that stop order. So what we're going to do is set this up. We're going to buy 5,684 units for a 10 pip take profit. Now you could wait for this to close and then just hit buy, or you could turn this into a buy stop at 1.36113 for 5684, and that'd be a buy stop. So now that's a pending order in the market. So if this hits, which it looks like it's going to, those should execute at the same time. Should close out this trailing stop as well as pick up that buy stop. Boom. So now we're out of the market. We've hit our trailing stop, and now we have a long position right here. So now to protect that, we're going to put in a sell limit for 31.29, and that position's going to go in at the same position as this take profit over here. So 1.36213, and that'll be a sell limit. And then to protect it if we're wrong, we've got to put in our sell stop down here. And this one will be for 8,813. And that'll be 30 pips below this position right here. So 1.36114 is where that position is. So this will be 1.35814. And that will be our sell stop. So now we have a bracket order right here. And we have a long position shooting for 10 pip profit. 9.9. By the time it closed, we lost 0.1. Sometimes that happens, kind of annoying, but whatever. Whatever. So that is our current setup. We're hoping this guy rebounds, comes back up for a 10 pip profit, and then it will pick up this sell limit, balance the hedge. If we're wrong and this continues to flush, then it will come down and pick up the sell stop, which will also balance our hedge. Just to give you a little update of where we're at, we're still sitting on this position. It's currently 4 pips in the money. It was about 5 a minute ago. It's pulling back. It's dancing just a little bit. So again, this is our take profit right up here at 1.36213. We're about what would that be? About 5.5 pips away from our take profit. When that executes, that'll close this position 100% while also executing this sell limit order. That would balance the hedge. So, well, right now we have 12,500 units on our long side, so we're maxed out, but we only have 3,687 units on the short side. So we have an unbalanced hedge, hoping to come back up and pick up this 10 pip profit. If it does, then, winner, winner. If it doesn't and we're wrong, then it sells back off. Then it will come down here and pick up this sell stop order right here. So let's see what happens. It's kind of bouncing up. Now we're 6 pips in the money. So what do we need to get? About another four pips for that. So anyway, that's the philosophy behind it. We have a bracket order on our sell side while we have a long position working for a clean take profit on the long side. Well, that's unfortunate. We were cooking along doing pretty good. This was like 5-6 pips in the money, I think. Last time we looked, and how it's 16 pips out of the money. What are we gonna do? I say we hold and hope. Hold and hope, baby. Don't give up hope. If we hope enough, I bet this turns around. I just don't know if that's gonna work, that holding hope philosophy. So just because I'm, just not quite that gutsy, I'm gonna keep this sell stop right here. This is our backstop. If this doesn't work out, boom, we pick that bad boy up and we balance the hedge. It's a bit later in the afternoon and we did not close out. In fact, we've just kind of boringly gone down to here, come back. This is currently -7 pips. That long position we've been cooking, which means we're about 17 pips away from this take profit. Still right in the middle of our bracket order. So the plan is to kind of let this go for the rest of the day. If it gets to right before bedtime and we have not either come down here and hit this stop order or gone up here and hit this take profit, what I'll probably do is cancel the take profit and cancel the limit order and see if this rebounds up, see where we're at in the morning, or die on that sword of that sell stop order, see what happens. So I guess you'll have to come back tomorrow and see what happened. It is that time where we dive in to the comment section. Let's check it out. One guy wrote a little tip with clarity that I use on the long side. If you put a blue horizontal line at the buy and a red horizontal line at the sell, with the global drawing on it, it makes it a lot easier. I'll be honest, if there's one thing that's been a little bit frustrating about making YouTube videos is not being able to use that. So I have my personal account I'm trading, and then I have this YouTube account I'm trading. And if I have global lines on, then if I make lines on my personal account, it shows up on the YouTube account. If I make lines on the YouTube account, it shows up on the global account. You can see the conundrum I'm in here. So anyway, genius tip. And for everyone watching, I would highly recommend turning on global sync. That's this right here, where it'll be synced across that chart. So if you make a line on this chart, it would automatically appear on this line chart. And I would line out each of these positions. It makes it really easy, especially if you're checking your positions on your phone while you're out playing golf. Genius. So anyway, thanks for the tip. But with the old YouTubery, unfortunately, that's one of my biggest regrets. All right, what else we got cooking? One person wrote, please, what do you advise on the XAU USD? I think that's gold. I'm not even sure. I have no strong words of wisdom because I don't trade it. I just know that that particular pair is like trying to catch a tornado. One person wrote, hey Chad, I have a question. When I open two positions in the same direction, rather than keeping it as two individual positions in the same direction, my broker averages the entry price for my position, then I have to open a hedge against it. Will that cause a problem or is it okay? So it is a little bit harder to trade a broker that forces you to average the positions, but it's surely not the end of the world. So for example, if we go to this setup right here, I have a 5,684 unit position here and a 6,816 unit position here. So the net position on that would be 1.37116. So if you were trading the net position, then this would be your spot where that would come into play. And you would treat that as if it was this position or this. You just always have to be working on the average. It does slow down the process. I've actually traded a, a live account, not with my current setup, with a different broker that forced the average. And I did that for a few months alongside. I don't like it as well. It forces you to be out of trading or unable to trade for bigger durations. So that might be the only hiccup you might experience is it'll slow you down, but there's no question that you could trade that average just as long as your average position on the right hand side balances your average on the left and you're just working the two average positions.